To figure out Wright's law in the case of artificial intelligence, the data measure is a relative compute unit, and it has a metric for data per compute unit. Cost went down by 48% for every time that measure doubled over time. Okay, that was the moment that put an end to the show. The total cost of AI training is going down by 70% every year. This includes both hardware and software. What does that mean? The total number of times will double in less than a year. That's why today's events are so shocking. Cathie Wood recently talked about how AI training costs have dropped remarkably, citing improvements in both hardware and software as the reason for the 70% yearly drop. But why should people who like and invest in cryptocurrencies care about these AI developments? The answer lies in the fact that AI makes things faster and cheaper. It will be easier to make blockchain technologies and better, more efficient mining algorithms as the cost of computing power goes down. This not only makes it easier for more people to use cryptocurrency, but it also makes them more scalable. New data supports this trend by showing that people are adopting technology faster than ever before. This could be related to the growth of the crypto market. Top tech research companies say that AI could increase blockchain throughput by more than 50% in just the next 2 years by lowering operational costs. When AI and blockchain technologies work together, they could make cryptocurrencies much more useful and popular, opening up new possibilities for both investors and users. We use Square or Block. Several years ago, a study showed that if you add Bitcoin mining to a utility ecosystem, think about this. This is the coming together of battery technology and Bitcoin. You can build too much solar and wind because that's what you're dealing with in that ecosystem. When it comes to Florida, the big battery storage systems get full because it's so sunny there. After that, the energy would be lost because the batteries are full. Now that energy is being used to mine Bitcoin, which makes companies more money so they can build more solar and wind power. One more thing that came together that wasn't clear until we thought about Bitcoin's impact on the world and how much electricity it used. Now, there is a part of this environment that will last. As you can see from this chart, technology has led to big jumps in GDP growth over the course of history. For example, from 1,400 to 1,900 or 1,500 to 1,900, the world's GDP grew by about 0.6% per year. This is real GDP growth. As time goes on, most people think that GDP will go down. We totally don't agree with that, and we think that growth should be higher than it was last time. That was 5 times, which would have put us at 15%. But we didn't want to look totally crazy, so we only put out 8%. But it doesn't make sense for GDP growth to slow down when so many new things are being made all the time. Another thing that doesn't make sense is that inflation will still be a problem. At the moment, there are 2 views on inflation. Stan Druckenmiller has been mentioned a few times. So many of you have probably heard him on Bloomberg or CNBC. He also thinks that inflation should stay high for a longer time. It's the 1970s. This can't be solved. Think about the wage talks between the UALBR companies and the airlines, 10% per year, 6% per year. And our answer is that a lot of these businesses are going to be messed up, taken apart, and maybe even destroyed. Because of this, those pay increases will end up squeezing margins. This isn't going to turn into inflation. If anything, we think we're going to enter a time of decline. I understand that deflation sounds scary. Because of 08 to 09, it sounds scary. Back then, everyone was talking about a bust caused by low prices, and it was terrible because the economy almost went down completely. We're not talking about that right now. Deflation can be good or bad. It was bad to show you what deflation will be like. People will leave companies that haven't committed enough to adapt to the new world. This is called creative destruction. What I said before about the good decline. As people learn new skills, costs go down, which is reflected in prices. This leads to huge increases in demand for these technologies and increased output, creating an amazing cycle that will never end. A lot of you know that CNBC called me Crazy Cathie, even though you may still think that we believe what I just said because we've looked into it. Not many people are doing the study we are because they don't believe it. Also, they don't think you should do a lot from the top down. That became something I said a lot as I learned the game. Back in the day, most fund managers knew a lot about macroeconomics and thought from the top down. After that, we entered this world from the bottom up. You can't think from the top down. That will make you think crazy things like this. That's why there is psychology. The truth will win out, I think. We had our first taste of this. We've had 2 big tastes of it already. A lot of young people were stuck at home during the pandemic and learned about the stock market. This is how they actually found ARK. We also talked a lot about Bitcoin, Tesla, and new ideas in general. But those two really hit home with the teens and young adults. In the end, they did really well because this idea of super exponential growth is beginning to play out in the case of Tesla. It's even more important now that other automakers are leaving. And because AI is getting better all the time, it will soon be able to do things on its own.